Hi grade 12s and welcome back to another accounting video. Today we're going to be focusing on statements and audit reports, right? So I spoke to you about we went through together the creation of financial statements, how we create them, how we deal with adjustments. We went through interpreting those financial statements, and now obviously we can't just assume that everything goes smoothly. And we also can't assume that the principle of integrity in a business is being carried out all the time. So what's important to do is have an audit at the end of each year to assess whether the employees of the business are working in honesty, and if they are operating, in honesty, and if they're not doing anything fraudulent and anything that is a little bit shady. So this is where auditors come in and audit reports come in, right? And so before we go into the explanation of an audit report, we're just going to go into a little bit of revision, which I believe will be this portion only, and a bit that I'm going to tell you about. So revision, right? This is a revision because this is basic information that you should know. So an auditor is appointed by the shareholders at the annual general meeting, and they are tasked to study the financial statements. So they're tasked to study the financial statements and comment on the validity of the financial statements. So are they being honestly prepared, or is someone doing funny things, and are they additions of money or more withdrawals than meets the eye? And then we also have different types of auditors. So we have the internal auditors and we have independent or external auditors. This is also information you should be aware of. So our independent auditors are appointed by directors to monitor controls and financial information on a continuous basis. So maybe every 3 months or just regularly in the business as and when it operates. Then external auditors or independent auditors are appointed by shareholders at the annual general meeting, right, to express an opinion on the established financial statements, right? So these are the ones we're going to focus on in this lesson and in the lessons coming forward. And so then to the shareholders, right, they are addressed to them, right, and they have duty, right, to examine. So their duty is to examine, right? So they are basically evaluators. They evaluate the statements. Just so you can see the statements, right? So I'm just gonna say I can't even see that. Okay, let me just move that for you and write it again. So it's basically that they evaluate. Okay. So then, now let's go into an audit report. An audit report, right, should contain a validating statement, and we'll get to what that is in a moment. And it should mainly so it should contain a validating statement, right? And namely that it is that the shareholder has examined the annual financial statements and then give their conclusion on the quality of the financial statements. So the auditor comes into the business, the external auditor in particular comes into the statements and says, okay, cool, give me all of your financial statements. I'm going to audit that. They also in turn sometimes audit while business is operating or close to the end of the financial statement. And what they do is then check if all the financial statements are valid and everything is running in order, and then they give you an opinion and then an elaborated explanation of why they gave that opinion. Sometimes they do that. Sometimes they don't give you an extended opinion. So then there are types of audit reports, and this is where it gets interesting. So there are 3 types of audit reports. The first type of an audit report is a qualified audit report. This is a bad audit report, right? Which is weird because you think, oh, it's qualified, so it should be good. Like we qualify, we pass the test. No, a qualified audit report is bad, right? And then an unqualified audit report. So I'm just going to connect this like this so that you can. An unqualified audit report is good. And then when the auditor says withhold, so a withheld audit report is very bad. So sometimes the auditor says, cool, I've looked into everything. I feel like it is perfect. Y'all can continue in business. Everything is fine. That's when they issue an unqualified report, audit report. Then they can say, listen, it's shaky. There's a lot of stuff that are wrong. Here are points of where things can improve. There's some fraudulent action here and there. But overall, we have decided to give you an audit report. And so they give you a qualified audit report, which is a bad audit report. So just think of it in opposite. And then sometimes they can say it is so bad that I do not want to even express my opinion on these financial statements. I do not want to express my opinion in any form. So they withhold the financial statement, and that is when it is crucially bad, right? And so this is a pretty simple chapter, I feel like, and I believe that this is your easy marks. This is where you win in the exam, because this is general information that will ask you questions about auditors, what types of auditors, and all of the rest. And so it's very important for you to just study this information, because it's mostly content more than anything. Hardly any calculations, no calculations actually. So it's mostly content. Just study this content so that you can apply it in your exam, and that's at a free, it's usually 15-20 marks. 15 marks actually, 10-15 marks. It's a free 10-15 marks for you, which is pretty hefty in terms of the change it could make to your final marks. So other than that, thank you once again for watching this video. I hope that it helped you. I hope that this general knowledge / revision that we did for past knowledge that you should have, I hope that this is helpful for you, and I hope that your studying is easier because of this video that I have put together for you. Other than that, thank you so much for watching, and goodbye.